Yo, 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 what is up, guys? Happy Thursday. Welcome to the stream. Hope everyone is doing very, very well. Without any further ado, let's jump into the chatting screen and say a big welcome to my co host, the one, the only, Tomas Perfumo. Tomas, welcome to the stream. We have an interesting show lined up today.
Oh, I'm sure we do. Appreciate you having me here.
We are going to be talking today about none other than Michael Saylor and strategy. We're talking about the change that has occurred recently. They updated their company, the way that the company works. They've gone from being a buy and hold mechanism to a more traditional financial institution that does realize profits when it makes sense to do so. But there's a lot to examine here, and just before the show started, Tomas and I were talking about Saylor as an individual and how people have either dunked on him or mythologized him in a certain sense. We're going to try and separate the man from the company, the man from the vehicle today, and just have a look at maybe what his plan is, what his strategy is, what he's trying to do, and what it means for the wider market. What are the implications for not just BTC, but indeed the wider crypto market? Interesting topic today, Thomas. Interesting topic.
Bitcoin's always interesting to me.
So I guess we'll kick things off with maybe a little bit of background for those who don't know, for those who are maybe new entrants to the space, for those who have been living under a rock for the for the last few years. Who is Michael Saylor? Who is Michael Saylor, and what is strategy, formerly known as MicroStrategy?
Yeah, so Michael Saylor is the current chairman of MicroStrategy, or now called Strategy. MSTR is the ticker. And Strategy was the original, call it Bitcoin treasury company in the public equity market. So they actually embarked on this strategy of acquiring as many Bitcoins as they could on their balance sheet starting in August of 2020. So they were not the earliest when it came to Bitcoin, but certainly the trendsetter when it came to public companies participating in Bitcoin market and sort of the institutionalization of Bitcoin in that respect. And over that time, over the last 6 years, they've acquired net 840,000 Bitcoins onto their treasury. And so they represent nearly 5% of the circulating supply of Bitcoin today. So it's a pretty meaningful amount. And they've bought cumulatively over $60 billion of Bitcoin in the last 2.5 years. And so they are, in my opinion, the largest, if not one of the largest players when it comes to Bitcoin on the demand side. This company's existed for a very long time. It's been around since the dot-com bubble. It had a lot of notoriety as this boom bust stock back then. Outside of this Bitcoin treasury, they have a relatively small business intelligence business that they've been operating for decades now. But it's this Bitcoin treasury strategy that's really taken it off, put it on the map over the last 6 years.
For sure. You mentioned that they had acquired almost 5%. I think that, or 5% of the circulating supply. I think one of the figures that stands out in my mind is their average buy price per BTC. And this is something maybe we can speak about in a little bit more detail. Because I guess the question on people's minds is, how are you in the industry for so long, and how did you start buying BTC so early and still come out with an average buy price of around $75,000 per BTC? I think the exact price is 75,385. So a lot of people look at that and they assume that there's been some, I don't know, call it an error of execution, or perhaps he just, people go as far as to say that he doesn't know what he's doing. What's your take on that, and does it matter?
Yeah, so let's start with the execution component of it. I think people confuse the strategy that they have. Like they're not a hedge fund, right? So they're not actively trying to buy and sell at different price levels and make P&L. Michael Saylor has indicated that he is into Bitcoin for the long haul. He thinks that each coin is worth perhaps millions of dollars. And so whether you're buying it at 70,000 or 120,000, with that kind of thesis in mind and the time horizon he's playing for, it's kind of a rounding error, to be honest, even though it sounds material today. When you think about MicroStrategy as a company, they don't generate a lot of cash flow from the business intelligence business. It's on the order of like maybe $50 million of profit a year. It's a very small business. And so if you ask the question, well, how do they buy billions of dollars of Bitcoin? They've done it through fundraising. So things like issuing convertible bonds or issuing common equity and preferred equity, for example. And their strategy has been using capital markets to raise money to go out and buy Bitcoin and then hold it for the long haul. Now, when you think about capital markets in general, they can be very pro-cyclical. That is, money is available, IPO markets are hot, everyone's fundraising when the markets are typically pretty elevated. And so when you think about his strategy, which is to fundraise and then to buy Bitcoin with that money, he's not so much trying to time the market insofar as if he's able to fundraise today, he's going to buy Bitcoin today. It's pretty simple in that respect. And so if I pull this quick chart here,
Yeah.
on their fundraising history, what you'll notice is that most of the vast majority of the money that they've fundraised in dollar terms has come really since 2025, actually. And it's not a secret that if you overlay this with the Bitcoin purchases, that most of the Bitcoin they've purchased has been during that time frame as well. So again, I kind of think it's a misunderstanding of what the company does. They're not in the game of trying to buy and sell at different price levels at this area. They are in the capital markets fundraising game. They're exceptional at it. They are one of the largest equity fundraisers in the US over the last couple of years. And when they get that money, they straightforwardly just buy Bitcoin almost immediately. Doesn't matter what price level.
Yeah, and I think that's something that it can be quite difficult. And I'm very far from a Saylor fanboy, first of all, I should say that. But I also don't agree with this, this thing where it's become kind of fashionable among KOLs and people in CT just to absolutely bash him. Many with a kind of a poor understanding of what he represents and what his goals are when it comes to, as you say, when it comes to stacking BTC. Like I try and think about it in the sense that he's mostly price insensitive, right? And I think a great point that you made before we jumped on here is that, if you actually believe that the fair value for one Bitcoin is $1 million, then like the difference between buying at 90K and buying at 70K is like, it's nothing, right? It's like it's a rounding error. And I think that's something that it can be quite difficult for the average discretionary trader with, maybe 5 figs in their trading account. It's very difficult for them to conceptualize that Saylor isn't buying BTC today because he thinks it's cheap. He's buying because he thinks that it will be expensive tomorrow, right? He thinks that it will be expensive in the future. And he's almost looking back from that point to now. And with that goal in mind, with that kind of vision in mind, his only goal now is to accumulate BTC. And he doesn't really care what price it's at, right? As you said, it's whether you buy at 60K or 100K, like it's mostly a rounding error if you genuinely think that it's going to be worth millions in the future.
Yeah, I think that's the audience mismatch that you're describing there, which is for a trader audience, of course, buying at 60 to 90 makes all the difference. Whereas for an ultra long-term investor strategy that at least he's pitching, this idea that he's going to hold on to Bitcoin for decades and then it's going to run up to $1 million. The most important thing you can do is to be invested, because if you think about the return profile for a long-term investor, it typically follows the power law dynamic. You want to be there for the top 10, 20 best performing days, because that typically defines something on the order of like 80% of the return profile for an asset. This is not just Bitcoin, I'm talking equities too. And so you just want to be there. You just want to be invested. And so I really think that a lot of the confusion and sort of the animosity in some respects is driven by this like mismatch between just investing strategies between Michael Saylor versus a typical trader, an active trader. And I also think that the one thing that's worth highlighting is when it comes to price levels, I was oversimplifying a bit in the sense that it does matter what price level you buy depending on how you structure your company. So MicroStrategy, no secret, has some leverage on it in the form of convertible debt and preferred equity. You as a trader know this quite well. How you structure your leverage makes all the difference. And so with MicroStrategy in particular, what I think they've done well over the last, call it 2 years, is that they've shifted more towards preferred equity. And you can kind of see that in this chart, where we've shifted away from fundraising in convertible debt, which is this like darker blue bars or components, and we've moved into preferred equity. And the reason why this matters is because preferred equity and certainly common equity doesn't have the same rights to the underlying assets on the balance sheet. That is to say, you cannot default on preferred equity. If they stop paying the dividends on the preferred equity, they don't go to bankruptcy court. With convertible debt, that's different. If you stop paying the interest payments or you stop paying the debt itself when it's due, you can go to bankruptcy court. And so if you think about it from a trader's perspective, MicroStrategy has also been structuring its balance sheet, in my opinion, in a more thoughtful manner to avoid any kind of forced liquidation risk. And I think that's where perhaps some traders have had a rational critique of MicroStrategy as early as a few months ago, where they started drawing on cash balances and threatening to some extent the liquidity profile, because they still have some convertible debt that they owe money on over the next couple of years. And the biggest issue that I think people have with MicroStrategy is, do they end up becoming a forced seller? I personally don't think that they are going to be a forced seller anytime soon. I think they've well collateralized the balance sheet as a result of all the actions they've taken in the last couple of months. But I think that's been the only kind of like fair critique as to how they've operated, is have they put sort of the Bitcoin market at larger risk because they've over leveraged themselves in a structure that causes them to potentially be a forced seller.
And I want to come to back to that point of forced selling in a moment. I guess the critiques of Saylor have really become far more prevalent over the last like 12 months. I mean, to your point that he's been accumulating BTC now for whatever it is, 5 or 6 years. The real stress test has only come with this recent downside going back to October. I mean, before that it was Saylor is a genius. Saylor is going to be the first like Bitcoin trillionaire, etc., etc.
Yeah.
And then we see this pullback from October to now, where BTC goes approximately minus 50%. And now the narrative is shifted to, Saylor top blasted. Saylor is the reason we can't catch up with equities. Saylor is responsible. Saylor is a systemic risk. And while those things do have an element of truth, what is actually probably occurring is a little bit more subtle and has a little bit more nuance. I'm curious about that forced selling point. Do we know with any kind of certainty at what levels, you mentioned strategies, liquidity structure, their liquidity profile. Do we know exactly at what levels that will really be called into question?
Yeah, you can do some different kind of frameworks for the math. I'm going to pull up this slide here, which shows kind of a breakdown of their assets and claims against those assets. And so the first one I'll point you to at the very top, of course, is the Bitcoin stash. The treasury of Bitcoin they have on the balance sheet is worth over 50 billion. They have this preferred equity that's over 15 billion of liquidation preference that they've issued over the last year. The convertible debt is just under 7 billion, and then they have this cash reserve of close to 5 billion now. And the only asset or claim that could theoretically force them to sell Bitcoin would be the convertible debt. Again, because if you think about it, it's the only type of claim on the company that has the ability to put them into a bankruptcy court and force them to liquidate assets if they don't make payments. And so, if I'm oversimplifying here, you can either take out that debt by selling down Bitcoin, using some of the cash that they're able to raise on the balance sheet towards debt payments. The key part here is that not all that debt comes due tomorrow. The debts actually matures on a staggered basis between 2028 to 2032. They do have some put options on the debt where about 1 billion of it could come due late next year, and then another 3.5 billion could come due in the first half of 2028. So I would say that's the quote unquote liquidity wall that they might see over the next 2 years or so. But that's a long time away. And so when I talk to people on this presumption that, hey, MicroStrategy is going to be forced to sell Bitcoin, and I look at their cash needs over the next couple of years, their asset balance sheet reserve versus their convertible debt level. I just don't see how that plays out. I think you're ultimately going to be short Bitcoin if you're short this company for a very long time, waiting for that to play out. And at that point, you might as well just short Bitcoin with the thesis that Bitcoin is just going to be in a bear market for the next 2 years. I just think that's a hard trade to make. Not that it's, I suppose, I mean, you tell me if you think that you've come across a trader that is looking to short for 2 years, but I haven't spoken to one myself.
No, I mean, you look at. I think this is actually something we spoke about on the show 2 weeks ago. I mean, you look at the Bitcoin chart on a high enough time frame, and it is up only, and it can be easy to forget that when you look back at the price action since October to now. But on a high enough time frame, bear markets are just pullbacks. They're just higher lows, and I don't think this one will be any different. I personally think we're far closer to the end of this bear market than we are to the beginning. I think that the low is coming. I don't think it's quite in yet. I think that we're in for a green year next year, but that's probably a topic of a discussion maybe for the next show. I want to talk about the master structure a little bit more. What are the assets MSTR and STRC, and how do they work within the structure of strategy?
Sure. So MicroStrategy is a company, and of course, companies can, particularly public companies, they can issue a variety of different securities. And so MSTR is the basic common equity. It'd be the equivalent of buying AAPL for Apple or Google stock, etc. MSTR is the common equity. So that's the one that typically most people trade. It's probably the most liquid security in their stack as well. The more esoteric securities that they have start with a convertible debt. This is debt that is traded, but it's typically traded amongst a smaller group of niche market makers and call it investment strategists. Usually like special situations desk are the ones that trade convertible debt because they have more sophisticated strategies around options strategies within the common equity too. And so that is one that is I would say a much smaller niche or group of people that are trading those securities around. The other set of securities that you see commonly traded amongst retail investors would be the preferred equity securities. So Stretch STRC is the famous one that had the deep, quote unquote, depegging event over the last couple months. And so between MSTR and STRC, those are probably the most popular instruments that an average retail investor is going to be trading. They have very different profiles. The common equity, for example, like any company stock, if the company does well, if the asset value grows, typically the common equity value grows and there's uncapped upside. With preferred equity, it's not really the same thing. Preferred equity doesn't have this promise of uncapped upside. In many cases, you only have the right to a liquidation value, which is typically around $100, for example, or you also get dividend payments. So in the case of these preferred equities, like Stretch, for example, it's currently paying a 12% annualized coupon rate. And so that is sort of the differences between the return profile or the structure of the securities. They have different rights and presumptions around them. But again, the key point, and I think this is really worth stressing, is that this $15 billion preferred equity, it does not have a claim directly onto the Bitcoin. There is no price level at which the preferred equity can say, okay, time to sell your Bitcoin and pay me, the way that you might see with margin trading on a platform, for example. Likewise, there is no right that the preferred equity holder has to dividends, in the sense that they cannot take you to bankruptcy court for failing to pay a dividend. And so that gives the company a lot of flexibility to manage through bear markets, in the sense that if they ever had this kind of cash flow problem, they could turn off the cash spigot. They can turn off the outflow and just sit and wait through the bear market. Of course, the preferred equity can trade off, but that's what a market does. We're repricing risk. It's the convertible debt that you see here, again, the smaller piece that has those superior rights. And you had asked the question before, at what price does MicroStrategy theoretically become insolvent? The truth is, it looks more like a Bitcoin below $10,000 kind of price is basically where they theoretically become insolvent on paper. So you would need to see a tremendous amount of downside even from here.
Yep, that makes a ton of sense. So, I mean, again, staying on the topic of how strategy is structured Recently, we saw an announcement from Saylor, from Strategy, that they had changed the way that the company was going to operate somewhat from an institution that effectively just buys and accumulates BTC to something a little bit more in line with a traditional financial institution, a traditional fund, whereby they would be buying BTC but also selling or going into USD when it made sense to do so. What was the rationale behind that, and what's your take on that direction for the company to go in? I think there was a lot of people saying that was, maybe some kind of capitulation event from Saylor, or some kind of, I don't know, him being forced to retreat. I have a slightly different view, but I'm curious to know what your take on that was.
I think one of the problems that Michael Saylor and MicroStrategy have run into is that over time they have increased the level of transparency, disclosure, which are good things, by the way, in my opinion, for investors. But they've also increased the amount of guidance that they've provided. So these kind of like sets of rules. Oh, we will only issue stock if we will only issue stock if the price to NAV premium is at 2x or whatever the number is. And then they run into a market environment, which of course with Bitcoin being so volatile, you're going to run into a range of market environments. You run into a market environment where having flexibility outside of those rules is very meaningful. It's in some cases it's incredibly important or vital to the success and longevity of the company. And so I think they kind of trapped themselves in a place where over time they kept issuing more and more guidance around the metrics that they were looking at, that they cared about, the goals that they were targeting, and the rules that they were setting for where they would or would not issue securities. That the moment Bitcoin started trading like Bitcoin does in a volatile environment, they found themselves in a position where they either had to make a bad decision or they had to disappoint people in terms of like withdrawing that guidance. And so I think what you're seeing more recently is I wouldn't call it a capitulation. It's more, in my opinion, a reflection of that the rules that they've been setting just don't fit this market environment, and so or the reality that they live in today. And so what they're doing is they're trying to expand flexibility by, instead of saying we will only ever buy Bitcoin, we will never sell it, to we will sell it if it makes sense to sell it. It seems like a reasonable thing to do. And of course, I think a lot of traders get caught up in this, well, you said this versus what it is today. But if you think about it, at the end of the day, they're just trying to maximize flexibility and optionality for themselves. So I'm curious how you've seen this play out in the trader community side of things, because I get the consternation of you're going behind your word, but I kind of think that they are behaving like traders. They're trying to maximize flexibility in a very volatile environment.
Yeah, I mean, that's the thing. They have been goofed on, and I think a lot of people, it ties in with this thing where it's become very fashionable to goof on Saylor with maybe a limited understanding of the goals that he has in mind, or his investment time horizon, which is very, very different from most of the people doing the goofing, I should add. But yeah, I think this just, it gives a lot of flexibility, as you said. It probably reduces the liquidity risks, or some of the liquidity risks that they were facing. I mean, I don't know the full details of how they were issuing MSTR, but I know that there was some. It was effectively a system whereby, in order for them to realize cash, they needed to issue more and more stock, right? It was something like that, and that was putting a lot of pressure on the chart. That was putting a lot of pressure on them. I think this makes a lot more sense in terms of just, yeah, as you say, giving that flexibility, allowing them a little bit more runway in order to realize, I guess, what is in their mind the expectancy of what they're doing, the positive expectancy of what they're doing. Because like I've said this already, I think that time will eventually vindicate Michael Saylor, and it's maybe a hot take to give in 2026 when the goofing on him on my timeline is at its absolute max. I think that it's one of those funny things where the outcome, and this is not the way that it should be, but the outcome will 100% either portray him as a hero or a villain, based on what he's doing now, irrespective of like the decisions he's making now. So like irrespective of the decisions he's making now with strategy, the investment decisions they're making, the structural decisions they're making. You know, if BTC is trading at 60K tomorrow, he's an idiot, and if BTC is trading at 200K tomorrow, he's a genius. You know, and it really is one of those outcome dependent things, which is, again, that's not how it should be judged, but that's how he will be judged. And I think that if you are one of these people who thinks that BTC will eventually trade higher, if you are one of these people who thinks that we're very close to cycle lows now and we will see a new all-time high in the next 18, 24, 36 months, whatever it is, if you are one of those people, then you also have to be looking at Saylor and thinking, okay, well, time will eventually prove him right. Now, do I think that BTC is going to be trading at $1 million in 2035 and he's going to be the richest man on earth and the best investor of all time? Probably not. But I do think that BTC will eventually trade higher, and when it does, there's going to be a lot of people who are going to do a complete 180 on their view of Saylor, purely because price has gone up, right? Price going up being the ultimate bullish catalyst.
I agree. I think a lot of people have become perhaps overly emotional about it, and here's kind of like a crude analogy I'll make. A lot of people in some cases were betting against MSTR or STRC in recent months on the presumption that, hey, Michael Saylor created all these rules over the last year or 2 years of what they're going to do, what they're not going to do. And if they follow, it'd be the equivalent of like seeing the Titanic, seeing that it hit an iceberg, seeing that it's sinking, and then deciding, I'm going to get on that ship and sink with it, right? It's silly just because like you have this historic rule book that I'm going to stand on this sinking ship and I'm just going to let it sink, right? Michael Saylor, in my opinion, is a survivalist. You know, that's the role of a company management team, is to ensure at minimum that their company survives and that it's best positioned to grow value over time. And so I think the frustration or the thesis that a lot of people have built on as to why they should have bet against Saylor has been on this presumption that if they follow their own rules, then they're going to sink. And what they're doing is they're changing their rules and they're making sure that they survive and that they're in a good position to continue to grow value over time. And those same people who have been betting against him are saying, look, I was right. He's having to change the rules in order to survive. But that's kind of a silly argument again. Like you'd rather just not be the one going on the Titanic at that point. And if that's how you want to trade, I think that's not a great strategy personally, but I can understand why people get emotional about it.
That makes a ton of sense. As we enter the second half of the show here, I'm just curious to see, I know that you have a few key charts relating to strategy and Saylor. Perhaps you can talk us through a few of those.
Sure. So we've talked a little bit about this one, which is the balance sheet composition. And again, the takeaway from this is that the only claim that could really actually force them into a sale is this convertible debt, which is a relatively small portion of their overall Bitcoin asset value, which is north of 50 billion. And it's also a relatively small portion against their current cash reserve. Like in theory, if they took their cash reserve today, they could chew out a lot of this debt. I'm oversimplifying there because technically that cash reserve is set aside for dividends and interest payments, but it shows you that they were able to build that over the last couple of months, and they effectively would have been able to take out all of their debt at this point. Now, we've talked a little bit about fundraising and how it's shifted from convertible debt to preferred equity, which has that added flexibility of not being a bankruptcy risk vehicle or risk engine. We've talked a little bit about how the fundraising and their Bitcoin purchase timeframe is correlated, right? You buy Bitcoin when you're able to fundraise. It's a very pro-cyclical. You're able to fundraise a lot when it's a bull market, therefore you're buying at bull market prices. The last couple charts that I do have here that I think are meaningful, I'll start with this one, because this one to me is perhaps the most meaningful chart when it comes to near-term Bitcoin demand and the implication that MicroStrategy has on the market. It's really important to note that Michael Saylor and MicroStrategy have purchased more than $16 billion of Bitcoin in 2026 alone. So I know people are up in arms talking about the $400 million of Bitcoin they've sold over the last few months and how he's ruined the market. He's also the biggest buyer this year, like hands down. I can't find anyone else who's bought as much as he has. And so I actually think that in some respects, Bitcoin is trading where it is because he's been in the market. But the market, of course, cares more about future demand, not so much where we've been in the past. And the important part about this chart is that it showcases that their cost of financing or their cost of fundraising has risen materially over the last couple of years. And where the way I'm going to explain it is this chart here is their price to NAV or net asset value multiple. It's basically what is the value of their stock in the market relative to the value of the assets on their balance sheet net of any liabilities. And so you can think of it as like trading value in the stock price versus fundamental value on their balance sheet. And historically, you can see that it's actually traded well north of 1, which is at the low end of the graph here, including the 2024-2025 cycle where it's traded as high as almost 4x. And the reason why this is meaningful is because the best way I can make the analogy here is if you're able to sell $1 bills for $4, you're going to do that all day, every day. And what they've done over the last couple of years is they've been able to sell $1 bills for anywhere between $2 to $4, and then they take the extra money and they go buy a ton of Bitcoin with it. What you see nowadays is that their price to NAV multiple is actually closer to 1, and it's been on this steep decline since late 2025. And so during 2026, like I mentioned before, they've actually vastly increased the proportion of their fundraising activity in the form of preferred equity. So about 50% of their fundraising year to date has been in the form of preferred equity. They've used that to buy an exceptional amount of Bitcoin. But that has a bit of a cap because the preferred equity is a point of a leverage vehicle, and they're already above some of their stated targets historically. And so that leaves us with the common equity. And so the question is, how much more common can they issue selling $1 bills for $2 to buy a bunch of Bitcoin? And what I'm telling you on this chart is that they're able to sell that dollar bill for something closer to $1. So you're closer to parity. And so this engine that I was saying before, you do this all day, it's pretty much on pause. And so when I think about the outlook for Bitcoin demand near term, I actually think MicroStrategy plays a much smaller role relative to other important vehicles like Bitcoin ETFs. And so this chart has been very important to me in trying to describe not just what's happened over the last few years, but also my forward expectation into how big of a buyer can Michael Saylor be in the near future. Because what I think people are not taking into account is when you talk about the amount of Bitcoins they've sold in the last few months, $400 million, you can say that that's a big deal. I think it's a bigger deal that the person who bought $16 billion of Bitcoins hasn't bought in 2.5, 3 months. Like that to me is the bigger deal, not how much they've sold. And so I'm telling you right now, I personally think that at these levels, they're not likely to be a material buyer in the near future.
And when does that change?
Depends, because the problem with this is that it's a very pro-cyclical reflexive chart. What we saw in the last bear market cycle, so 2022, you can actually see that the price to NAV multiple also fell, right? So FTX, for example, catalyzed the collapse of FTX in late 2022, catalyzed this drop from around 1.5 times to closer to 1. And at the very bottom, they were actually trading at a slight discount to their net asset value. And like the last cycle, had this collapse in the net asset value premium. And so in my opinion, what needs to happen for the engine to turn back on is I actually think you need to have some kind of non-MicroStrategy related catalyst that brings back momentum and sentiment into Bitcoin in such a way that you break through to the upside. And then the question becomes, do we start to see this NAV premium return? And if it does, then it creates that virtuous cycle again where they're able to fundraise, they're able to buy more Bitcoin, and by doing so, they pressure the price higher, and it creates that feedback loop. The one thing about MicroStrategy that's fascinating is The reason why it's so emotionally charged and amplified is because it's super reflexive. In a down market, they're not buying, makes everything worse. In an up market, they're buying a lot, it makes everything better. So it is truly like a point of leverage in sentiment around Bitcoin.
Yeah, and as I said earlier, price is the ultimate bullish catalyst, but price is also the ultimate determiner of whether or not Saylor will be vindicated in his decisions. I mean, going back to that execution point again, do you think that there's anything that Saylor should have done differently, looking back at particularly their buying behavior over the last 12 months? Because this is something that I hear from even the guys who are kind of in Saylor's camp. They'll say, well, yes, but even basic technical analysis or even basic, fundamental analysis, cyclical analysis would have told him to go easier on the buys towards the end of this cycle, or maybe to go easier on the buys when BTC was trading at over 100K, and to go heavier on the buys, when it was at its bear market lows in 2022, 2023, whatever it was. Is that even something that enters the discussion when it comes to a guy like Saylor and a vehicle like Strategy? Again, bearing in mind their investment horizons, their time horizons being completely different from the vast majority of discretionary traders.
I personally think it would be a huge mistake for them to try to become much more sophisticated on their buying strategy in hindsight. And the reason is quite simple. They're not traders. So why pretend to be, and why try to play that game? I think you're more likely to make mistakes. Here's sort of like the bottom line for how I think about it. Everyone focuses on the headline price. They bought at an average price of $75,000. I actually think of it quite differently. If I'm able to sell a dollar bill for $2 and I buy $2 of Bitcoin, I basically bought the Bitcoin half off, if you think about it that way. And so I actually think that the real price that they've been able to sell it, or excuse me, that they've been able to buy Bitcoin at, is lower when you reflect on the amount of securities they've been issuing at a premium to the net asset value of the company itself. And if you do it that way, then it tells you, like, very quite simply, like, there's no reason to like try to actively manage it, because if you're selling dollar bills for $2, just buy $2 worth of Bitcoin. There's no price at which you have to wait for that to be a good idea. That's sort of how I think about it personally. The key thing here again is, if you're going to play with leverage, which they have done, then your long-term investment horizon, this idea of holding Bitcoin for 10 years and waiting for that $1 million price target, the only way you can claim that that's a real representation of your strategy is by making sure you're setting your company up to never be a forced seller during that time horizon. And that again goes to my comment earlier about the convertible debt, is they've been slowly migrating away from the convertible debt such that their time horizon doesn't, let's call it, like, become a forced 2-year time horizon where they might be forced to sell a bunch of Bitcoins because they have to pay off this debt. They've been pretty diligent, in my opinion, about growing the balance sheet outside of the convertible debt so that they can realize the full time horizon they're talking about. I think that's the thing that they should be spending the vast majority of their time on, not trying to play the hedge fund trading game with Bitcoin price. I just don't think that they've created a business around it. So they probably don't even have the talent for it.
That's a harsh indictment of the guys on Saylor's team. I want to talk briefly now about risk, and this is a comment that comes up again and again when people are talking about Saylor, but particularly when people are criticizing him, is that, and I guess it's a very crypto thing as well, right? Crypto being the decentralized digital currency, this idea that we're putting the power in the hands of the people, moving away from centralized organizations. And of course, in practice, that has not really been the case, especially this cycle. But I guess part of the criticism for Saylor is that he has effectively become the thing that crypto is supposed to fight against, which is this huge centralized entity that has a huge amount, like as you say, it's almost 5% of the circulating supply of BTC. And that not only is that contrary to, call them, the values of crypto, if you will, but it's also a massive, massive systemic risk because, well, it's a failure point, right? Failure point for some guy who has, 10 BTC in his wallet isn't massive, but for someone who has like 850,000 BTC, which is I think approximately the number he has, it's obviously it's a risk not just for him and strategy, but for the entire system.
I would be much more upset if he had leveraged the balance sheet in what I would call like an irresponsible manner, where he would have real forced liquidation risk in the very near term. That would upset me. But on this comment around the amount of Bitcoin that he should or should not be allowed, or not allowed, maybe not the right word, but like what is reasonable versus unreasonable? Is he creating like systemic risks and whatnot? I'm curious your view on this too, but I take a very kind of fundamentalist, more call it libertarian-esque approach to this, which is simply he's a market buyer, a market participant, and Bitcoin is an open market. And if you believe in that kind of free market principle, I don't have any qualms with him buying a bunch of Bitcoin. And candidly speaking, I think the big difference between him versus any other centralized entity buying a lot of Bitcoins is that he's doing so in a public market setting. So there's a lot of scrutiny, a lot of oversight around his company's actions and their reporting and whatnot. He's one of the more transparent public companies I've ever encountered. They issue a weekly filing with their activities, and so on the spectrum of actors buying tons of Bitcoin, he's been, in my opinion, a pretty benign risk in that sense. And like I said, I think anyone should have the freedom to buy Bitcoin, including a nation state or corporate entity or what have you. What's your take on that?
I guess it's something that I feel like we won't know the full ramifications until something bad does happen, right? I definitely don't ascribe to this model of like, I guess people talking about, once BTC goes low enough, then Michael Saylor will get liquidated, and that will cause that will have massive knock-on effect for the rest of the market. I think that's a rather simplistic view, but you talk about this maybe reflexive liquidity spiral, and it's something that you mentioned earlier, whereby he could be put in a tight spot when you're talking about MNAV compressing, when you talk about strategy maybe losing its ability to attract new capital while its existing obligations remain the same, its existing debt obligations remain the same, and then it's just forced to sell BTC in order to realize cash. And that could maybe have, it's not a systemic risk, but it is a risk for, it's a risk for the market in terms of like the biggest holder is now becoming it's not being liquidated, but it's being forced to sell in order to realize some capital, in order to realize some liquidity, in order to realize some cash. And I think like that has become it has gone from being like a theoretical consideration to something that people are genuinely worried about with this last well, not quite 12, but 10 or 11 months of downside, because this is like the stress test, right? And I guess the argument there is like, okay, but what if BTC goes to like 35k, or what if it goes to like I had a Mercury on stream a few months ago, Trader Mercury, a guy that I really respect. He was saying he was looking at like 27 or 28k as his BTC bottom, and he was dead serious about it. There are lots of guys looking at really low levels, and I guess it's that question of like how much pressure would be put on a vehicle like that if BTC were to not just go minus 50% from its cycle all-time high, but going like minus 70%, going minus 75%, right? And I think that's where that's where it'll be really tested, and a lot of those questions will go from like theoretical considerations to, okay, what are the actual market ramifications of this?
Yeah, you had the question earlier, would I change anything about their buying strategy? And I said I wouldn't. If you ask me like in general, would I change anything about their strategy? Let's call it on the capital structure side. I think I would. I would be if I were them, I would have been more aggressively looking to retire the convertible debt with some of the funds that they raised from the preferred equity. Because what they were doing back in April, May, when they were raising a bunch of equity, a preferred equity via stretch, they were basically just plowing that right into Bitcoin. And I think it would have been a better use of capital. Maybe not, maybe it's not the highest value accretion over the long term if things work out well. But I do think it would have been nice to see that they would take some of those funds and they would use it towards being more aggressive on retiring the debt. So they've done 1.5 billion of debt buybacks. I would have loved to see them, of the 7 billion they raised in preferred equity, I would have loved to see them chomp down more on that because to your point, I think the biggest risk to their thesis, their long-term horizon is always leverage. It's always if I have an investment time horizon of 10 years, am I structured to be able to survive 10 years? And if the answer is no, then you should probably look to address that. Ironically, the last bear market cycle, I would argue they were much worse positioned. Their convertible debt as a percentage of the overall capitalization of the company was way higher, way higher. And so they were in much more of a, call it dangerous territory and much more sensitive to whether the cycle would ever recover. And it did, and they were able to retire a lot of that debt via conversion into equity, which so it worked out for them. But that's probably what I would change or what I would suggest doing differently is taking some of the cash they were able to raise and not plowing 100% into Bitcoin, but taking some of it and taking out some of this convertible debt that they've been wanting to do for a while now, and putting themselves in a call it like a perfect condition where they are never going to have to compromise on the convertible debt side of things. And I hear your point that as they become a much bigger part of the market, I think there's a bigger spotlight for that, and hence the scrutiny.
Yeah, I mean, I guess it's one of those things where, he's not necessarily a systemic risk because he owns the BTC. It's the systemic risk arises because he's in one way of thinking it, he's connected the BTC that he owns, which is like this huge portion of the supply, to this like reflexive liquidity generating capital markets
That's right.
exposed structure, and that's the risk, right? Where
Yeah.
it's one of those things where if in a bull market it's fine because everything's working the right way and facing the right direction and the flywheel is rotating in the right direction, etc., etc. But as prices go down and that system is stressed, then we're seeing kind of what happens when things turn the other way. And I think that's maybe the risk that I see. Question here in the chat: at what point does raising capital to buy more Bitcoin stop being accretive to shareholders and start becoming financial engineering? Do you have any thoughts on that, Thomas?
Yeah, I mean, whenever you see the price to NAV multiple that I have on this chart, if you see that it's above 1, in theory, they're able to issue equity and buy the underlying asset, and that is technically accretive. The tricky part that I think people get caught up in is that if they bought today, and let's say they realize, I don't know, 10% accretion, if Bitcoin trades down 10% tomorrow, it looks as though they've reversed all the value that they've added. But the truth is that when you issue equity, it's permanent, right? And so in some respects, they've created permanent value in the form of equity in this vehicle. And I think at that point, it becomes kind of like a bet on Bitcoin price in general. So the point at which they are not able to buy back or buy Bitcoin accretively is when this price to NAV multiple falls below 1. And that's where the reverse happens. We haven't talked about this, but the question around at what price does it become interesting for them to sell Bitcoin? for example, because their new strategy of being able to buy and sell, there are price points at which it actually makes a lot of sense for them to sell Bitcoin and buy back their stock. And that's where if the price to NAV multiple falls well below one, like it did back in the 22-23 cycle, I think it fell as low as like 0.8 or so, if I'm not mistaken. Then you're thinking about, hey, I'm able to sell this asset for $1 and buy back the claim against that asset for 80 cents. And that's always going to be a profitable trade as long as that discount exists. So that's how I would answer that question. The preferred is a bit trickier, like it's a quasi debt instrument, if you will. Can't take you to bankruptcy, but it also doesn't participate in the common equity on the upside. So it's more of that one, the accretion math isn't so straightforward.
That makes sense. Question here about the charts that you're looking at. Where does someone find them online? These, as far as I'm aware, are bespoke charting tools that have been put together especially for Kraken VIP clients, but also our audience. Am I correct in saying that, Tomas?
Yeah, I put all these charts together. The nice part is that all the data is technically available. And so all of this comes from financial reports from MicroStrategy. This price to NAV multiple chart is a daily chart. And one of the things that I'll mention here that's perhaps relevant is that they provide weekly updates. So they'll say, hey, we issued this much stock over the last week and we bought this much Bitcoin or sold this much Bitcoin. For the purpose of this daily chart, I tend to smooth it out. So I'll say, hey, they raised $1 billion of equity over a week. Let's just pretend they raised a couple hundred million every day during that week. So it's more of a smoothing function, but all the underlying data is available for free via their SEC filings. And if there's any questions around how to calculate this stuff, I can certainly follow up if there's enough demand for it.
That's good to know. That's good to know. The last few minutes of the chat here, I can't believe that we're already coming up on an hour. I would just like to talk a little bit, because this is, again, something that comes up in these discussions about Saylor and strategy, is Michael Saylor's personality, right? And people tend to speak, I guess, a little bit more negatively about that and its effect on strategy. Maybe his ability to communicate is not always the best, or it doesn't always, I guess, in my opinion, create the most value for his shareholders. And sometimes it can be a little bit confusing. And something we spoke about before we went live is how Saylor had said, you've been on record saying never sell your BTC. And then, of course, he sold some, and then someone asked him for clarification at some conference or another, and he said, oh, well, I actually meant that you guys should never sell your BTC, which is obviously, that's not really what you want to be hearing from like one of the foremost and most prominent figures in the space. And I think there's also, like, he posts these AI generated memes, and the reception to those is typically fairly negative, I would say. So, like, what are we to kind of take away about, Saylor as an individual and this position that he's in, right?
I think, like all things in life, you have to take it as you have to do a cost benefit kind of balanced analysis of it. So if Michael Saylor hadn't existed, do I think that Bitcoin would be where it is today? No, I think it wouldn't be as discussed. I don't think it would be as mainstream. Like I mentioned, over $60 billion of Bitcoin they've purchased in the last 2.5 years via MicroStrategy. And I think he's been a very strong advocate for the industry, for Bitcoin in general. He has, of course, placement in all sorts of institutional media centers, and he's advocated it to public companies as well as a treasury asset. And so I think all of that kind of notoriety gain that we've gotten from Saylor also comes with some of the, like, quote unquote cringe takes that people have around like the AI videos. And so I tend to like counter the position of, if you had more of a purist outcome, like we have a more pure market where you don't have any of these cringe takes and you don't have any of these talking points that's coming from this individual, well, then price would probably be lower, and I think everyone would feel like they're worse off as a result. I don't know many people who would say like, oh, I wish Michael didn't say anything, and I'll take Bitcoin price being half of where it is today for that to have happened. So I think you just have to like kind of think of it as both a positive and a negative. Like, again, most things in life. I think the most important thing in my view is he someone that is in a position where he lacks some kind of oversight, where he's taking a negligent amount of risk, and he's causing problems for the industry in general. And I can't really say that he's been doing that. And it's extraordinarily difficult to do that in the form of a public company where you have all of these kind of supervisory practices and protections built around public company reporting. So I think on balance, I think he's been a good energy for the industry, but we're in a bear market and people like to find people to blame. So I think he's also the easy pick for
He
that.
is, and there is a certain amount of that. As I said, I think that if BTC was trading at 100K today, no one would be goofing on him. But I mean, fond memories of him posting, an AI generated image of a sinking ship that was also on fire, and he seemed to be in the lifeboat, which I don't think was the best message for BTC holders shortly after BTC had kind of nuked. But yeah, maybe a topic for another day. As I flick back into the chatting screen, we're just coming up on 1 hour. That absolutely flew. Thank you so much for joining me today to talk about the one, the only Michael Saylor. He's definitely a character, no matter what you think of him. And like we kind of said here, I think it's fashionable, or it has become popular to kind of goof on him. But I kind of think that time will vindicate him largely. I think that he will be proven right. And I think that, if BTC trades at 200K 18 months from now, or 24 months from now, I think people will mostly forget the last 6 or 7 or 8 months of him being the perennial top blaster, and him being underwater, etc., etc. But that's probably something that we will only figure out with time. Anyway, guys, thank you very much for joining today. Thank you, of course, to my co-host Tomas Perfumo. This was a really interesting conversation. Tomas, thanks for joining me.
Thank
That's
you.
awesome, guys. And
Always
we will
a
be
pleasure.
back in 2 weeks for the next edition of The Breakdown. We don't know what we're talking about yet, but we will figure something out and let you know. Until that time, stay safe, try not to get liquidated, and we'll see you next time. Bye-bye.